Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to look at a couple different ideas with you. Obviously, this was a very volatile week for the markets, and whenever you approach something like that, or you have to address that that's what has happened. You have to address the changing of the landscape. So obviously, instead of just coming in now and trying to focus on buying dips, etc., which to some degree I think still has merit. But I think you also have to point out that from an options trader perspective, this is a whole new way of looking at opportunity. Thinkorswim will offer this value in your options, today's options. I'll give you that, but I also like including it here on the chart because it makes it a little bit easier to reference as you go through this. But it's basically to say that with implied volatility kicking up as high as it has throughout this week, we can get a lot more juice on coming out here and selling options. And one of the things that I like to look to do is anytime, because when you start exploring strategies like short strangles, one of the first ways of looking at it is typically to just sell the Delta 20 call and then to sell the Delta 20 put. Now, I like doing that when I feel like the Delta 20 call and Delta 20 put line up with technical resistance and what would basically be considered technical support. You don't want to be doing these strategies up here necessarily, but when you have a drop like this, to look at it and say, okay, do I think it'll stay in between these two ranges? I think that's a good way of approaching it. Now, I did this in SQ, and I did it in a way where it's not quite perfect. I think I can still make some money with it, but the thing that you want to be careful about is doing these in a series that will involve earnings, because that could keep that volatility elevated. As you can see here, I'm not directly in the earnings series, and the trade's been doing okay, but another place to compare the idea, because I like the idea fair enough in SQ, but then another place to look at it would be Walmart. Now, Walmart may not be a very exciting name, which is ideally what we would like to focus on, and I've just been looking at this with the idea that we would stay above 90 and then stay below 100. So you take that exact same way of thinking, and then when you look at this in your options trade tab, you can notice here where you have the sharp jump in implied volatility. That's where you want to focus on not being short Vega, but instead shorting the volatility here, where you have a better idea that, if the market, provided the market finds its footing and can move up, well, the volatility is not going to expand in this series, so that's why you focus on trying to sell those there, and, just doing them in the same way with the Delta 20 here, where you're basically lining it up with technical support, and then on the flip side, the Delta 20 at a psychological value of 100, try to take 40% out of the credit received, and I think those are some viable trades moving forward. So think about that, kind of stepping on the other side of implied volatility as we get into our upcoming expiration. And then also wanted to make sure that you were aware of the class that John is going to be starting tomorrow, Saturday the 13th. We'll get that kicked off at 11 a.m. Central Time, and he's going to be reviewing some of the strategies that he has been using in the current market, and I hope to see you there.
Hey everybody, thanks Henry, and let's take a look at what we got real quick for next week. The one thing I wanted to add here, well, two quick things. First, what's going on right now? We are in the process of forming what's called a W bottom. So we got this leg here. There's no such thing as a V-shaped correction. There's V-shaped ebbs and flows. So what the W bottom looks like then is we typically will, you never know exactly how high it's going to go, but usually you get to the 21. So, assuming that's going to come down for a couple of days, we rally for a couple of days, that puts us to about right there. And then you actually look for a rollover. And the rollover, usually, it could be exactly there, it could be a little higher, and then from there you kind of go back up, and then it's just really, from there it's a corrective pattern, and either then it breaks out and resumes its uptrend, or we actually start heading back lower. But this is what's going to happen next, very, very likely. All right, so how do you, different ways to time that and stuff. So it was interesting, today I was showing my daughter Avery. She and Dylan are both interested in trading, so I've been showing, you can see the levels right here. And so we did a trade here on the NASDAQ where you can, I can show you on the chart, but so she placed a short there, and then she covered it here. She did a couple of NASDAQ futures contracts, made like $300 or $265, and then I give her 20% of that. So then she gets to use that for V-Bucks or whatever she wants, and I'm trying to put together something a little bit better, in terms of like, hey, we've done stuff before where you got to, save some, give some to charity, that kind of stuff. But, obviously I'm making up the rules of being a parent as I go here, as I try to figure it out. But what I want to show you on a couple of things on this is in trying to establish this kind of W pattern, we're also going to be playing with these levels as well. All right, and so we did come up to here, and you can see here we're at the 2-hour and the 30-minute upper level. So this was a natural pausing point for today, but where does that leave us? Well, that's when we switch to the bigger perspective, and again, in terms of the W, that's why I kind of think we're going to be able to make it right up into here, which would be the essentially it's the weekly pivot, and this is what governs these bigger term corrections. So, and I'm doing this class on Saturday, and we're going to be talking about, well, those two charts I just showed you, how to use those, and then in conjunction with this one. So this is kind of the ebbs and flows, and this is going to be obviously very critical in the days and weeks ahead. So how this works, here you got, and these are not hindsight, these are drawn real time. So real time buy, and then it's like, oh, we're already rolling over. Okay, great. Now you can stay in that, you know, flush, 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 flush. Now we started getting some smaller buy signals here. So what I do on something like that is just, you can either scale in, okay, or wait till you at least get the 30. The 30 typically will stop it out. Now here you'll notice that there's that maroon color too. Well, with this tool, you actually have a bonus. There's the overbought, oversold stochastic, but there's also an RSI, so it's actually 2 in 1. And that is where the stochastic and the RSI came together. Very, very powerful reversal. And we actually bought futures today into the close on this and held them. We did it on the NASDAQ, and it was a fantastic move and closed them near the dead highs of the day. So it was a really good way to end the week. And we did the same thing here on Apple, where I didn't have it this morning when it gapped up, but you could see clear sell signals here, and then we got the buy signals. We got in, and we caught a nice move into the close. I really didn't want to hold anything over the weekend since I was going to be doing the class this week, but I call that's a nice, you know, nice $1,000 trade. Those are the day trades I like to do. I got to make at least $1,000 or it's not worth it. So it was the juice was worth the squeeze, so to speak. I'm not, you know, trying to make 10 cents or anything. These are options we bought at $7 and sold them at $8, right around there. So that's the kind of stuff that I like, and that's perfect for this. All right, so just a quick reminder, I'm going to be going through all these concepts tomorrow. We have a class that starts at 11 a.m. So a couple things and questions that popped up. One, I said in last night's video that we had a couple of spots left for the first 250 people. We're going to get a free ticket to our end-of-year tax loss selling class, which is this great strategy where you take advantage of people who are waited till the last day of the year to get out of their losing trades. The market makers know this. They walk away from the bid. It crashes. We can step in, take advantage of their pain, and flip it out the next week. I've done it every year for 20 years. It's amazing. So I said that there were some of those spots left, and there weren't. So that caused some frustration today. I apologize. I told Anthony over in customer service, said, look, we start at 11 a.m. tomorrow. Anybody who orders this class before 11 a.m. tomorrow gets a free ticket to the tax loss selling. There's no point in making anybody frustrated. So that's the first thing. Secondly, I don't think what people realize is that there's actually 3 indicators included. So the multi-snap indicator is one. There's the multi-range indicator, which is based on momentum, but built in within this, instead of doing it separately, there's also an RSI one. Okay, so that one is actually 2 tools. Now what happens is after this class is over, this goes into our online store at $14.97. Okay, you don't get that RSI tool with it, so you just get that one, and you don't get the tax loss selling. So a couple people were asking like, hey, I don't have time to watch it this weekend. When are you going to teach it again? Well, I'm not. Well, could I buy it later? You can, but it's just going to be more expensive and you don't get as much cool stuff with it. So I would just say even if you can't attend this live, we're going to record it. You could also get text alerts if you wanted to for the trades that we're doing during the live trading. And then you can take advantage of this going into the store price, get all 3 of those indicator tools, and also get a free ticket to the tax loss selling class at the end of the year. So all in all, it's a really good, I mean, it's just, to me, it's a really good deal like that. So the main thing with this for tomorrow is that starting at 11, we're going to kind of go over the tools themselves, and then we'll start going into the strategy. And then to get to this page, you just go to simplertrading.com/method. And you know, even if for some reason you're seeing this like it's Saturday, or maybe you're seeing this on Sunday, like right now it's Friday and I'm doing this video, but maybe you're seeing this on Sunday and it's already over, and you're like, oh my God, what do I do? You can still do this because the class isn't over yet. You could view that. And then we have 3 live trading days, the 16th, 17th, and 18th. The main thing is just make sure that you view also the recording of the quick start class. We did that on Thursday night. It's just 2 hours. It's a really good kind of soup to nuts, ebb and flow, some of the basic things like that. There was a lot of aha moments, even from members who have been with us for a while, just because they re-remembered a lot of stuff that's like, oh my gosh, I totally forgot that. So I highly recommend that. We'll do the live trading. You get you all set up on the indicators, and the biggest thing I've seen from the people who've been using this is that this tool is visually so easy. Okay, and it's easy enough that my kids can use it. But what it's also it's done the two things is, one, it's opened up a new set of income streams from the markets. You know, there's always that thing like, oh my gosh, the markets are choppy here, there's nothing to do. Well, now there is. This whole ebb and flow thing catches that chop, especially on like the indexes, like the S&P 500, where you trade futures or the spiders or whatever. So that's an income stream. But it also enhances the setups that you like. I love squeezes, but sometimes you get into a squeeze and there's like a 5-day freaking pullback that you have to hold on to, and it can suck the life out of you. This helps you time all that, so you can actually leg in and out of that, roll your deltas, all that fun stuff, and it just makes this much less frustrating, more fun, and it seems like you're just automatically in sync with the markets, which makes this so much easier. Anyway, link is simplertrading.com/method. We're starting Saturday morning at 11 o'clock Central. And again, if you're seeing this a little late, that's fine. You can still see the recording. I would certainly take advantage of this. You're gonna, as I was just remember we were talking today, and a couple people were asking us just to bring up some charts. And it's like, hey, could you look at live cattle? Sure. Could you look at the yen? Sure. Could you look at Apple? And what was great about that is because, you know, in a PowerPoint slide, I could look at things and maybe it's a little bit more planned out of exactly what I want to show. But just bringing up charts like that just on the fly, everybody was like, oh my gosh, these levels here are great. And so it's like, okay, are these painted in hindsight? No, they're real time. They're real time. That's what I love about these things. It's none of this hindsight crap. It's real time, so you can make a decision in real time. And anyway, we're going to dive into this and talk about it on Saturday. All right, you guys have a fantastic weekend. Looking forward to working with you. And good luck and good trading.